Hello traders, Gary Wagner here. Just about 12 noon in Honolulu, 5 o'clock in New York. It is Tuesday, 21st day of January, 2020, and this is the daily report for gold and silver. Gold did close nominally lower on the day, down about $2 and change, but what is interesting is how it is traded over the last 24 hours, because following the conclusion of Martin Luther King Day here, when trading resumed in Europe, it was up about $6 to $7. Then mid-session in the night, concern about the influenza in China took the market substantially lower, down about $12, and then finished, in essence, very, very close to the open. What we are noticing is that even on a weekly chart, we have had a significant event with consecutive doji candles, and that will be the focus of today's show, what to look for and what this candle type could be indicating. But first, to the price board. Interesting action in gold pricing over the last 24 hours, where we saw the market firm as it opened overseas following the conclusion of Martin Luther King Day here in the United States, trading up about $6 on the day, and then fell out of grace, down about $12 on the day, the low being $1,546 before settling down only $2.30 at $15.58. We'll talk about the weekly chart and candlesticks as they refer to some consecutive dojis when we pull up our technical studies. Silver really did get hit hard, down about 30 cents, over 1.5% drop, 17.78. Platinum lost about 2%, a little bit over, losing $20.80, closing at $1,004. And lastly, palladium, which had been up $62 on the day, closed up but only nominally higher, $11.30. It's still king of the hill at $22.3620. Let's take a look at our technical studies. When we look at a daily candlestick chart of gold, what we see is pretty erratic behavior in terms of the range itself and the direction of gold, because what we have seen is a market that's had extreme highs and lows, but at the same time is kind of following this baseline at approximately 1560 to 1565. We can see that throughout last week's trading, it did have some real trouble trading above that. That is where we are currently pegging resistance. But when we look at a weekly chart, we can see a lot more clarity and a lot less noise, because the last 2 weeks have resulted in consecutive dojis each week. And they're actually significant types of dojis because of the length of this upper and lower wick 2 weeks ago. And then last week, we really get this interesting candle where we had the high and the open and close at the same price point. But I think what the most significant thing is that even though we had large price moves, we have seen the market, in essence, open and close at the same price. That, of course, creates a doji, and that was the topic of our opening letter today, to try to express what this could mean, whether it is significant or not. The key is where the market goes from here. On a daily doji, when you get a couple consecutive days, it is not as significant as when you get them on a weekly chart, because what that says is that neither the bulls nor the bears had absolute control over the market during these two trading weeks, and we see that really reflected in the open and closing price being about a tick apart. Both weeks had lower closes than the open, but it's more significant that it was only a tick or two away from the opening price. The other thing that is absolutely significant is where these open and closing prices fell upon, and that is our current level of resistance, which is the high achieved last year. We can see that in both weeks here, it opened just above and closed just below. This week, of course, is a shortened trading week. It is Tuesday, so we've got a good 3 days before we can see what the outcome of our weekly candlestick is, and that's really going to tell us some really relevant information as to where gold goes from here. If we get an effective close above, say, 65 on a weekly chart, that will tell us that these last 2 trading weeks really indicated consolidation in the market. The market had been in a defined rally mode. It hit this extreme high during the Iran and United States crisis that occurred. It came back down. When it came back down the second week, meaning last week, we got the same thing. So if we get the market moving above on a closing basis on a weekly chart, it really tells us this was a consolidation indicator, and now we are in a new leg of an upside rally. However, the reciprocal is also true. If we get a solidly lower close this week, creating a red candle with a lower low, and that is what I think would be most significant. If we saw it close at a lower low than last week, and it is a large red candle, that would indicate that these 2 dojis really were significant in that they were indicating a change from a bullish market to a bearish market. It is for that reason that this week will be significant in that it should provide us with some information as to what the significance of these 2 consecutive dojis mean. Maintain your current neutral stance. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.